Hi everyone, I'm Mirela Ciobanu, lead editor with The Papers, and this year The Papers continues our series of articles and video interviews that aim to bridge the knowledge gap between traditional finance and Web3 payments, DeFi. And this year we are going beyond the buzz and we aim to show real use cases of how digital assets are integrated into physical retail systems. As such, I'm sitting down with Daniel McCabe, the co-founder and CEO of Flexa, a leader in pure digital payments infrastructure. Based in New York, he has been instrumental in building a network that enables merchants to accept digital assets at over 60,000 locations. Am I right, Daniel?
You are correct. Yeah.
Okay, great. So nice to have you. So please tell us a bit about yourself and yeah, how does your background tie into Flexa story?
Wow, great question. My background is kind of a weird route into Flexa's story because I am an attorney by trade. So I was an attorney in private practice for, wow, many years, too many years to disclose. I had a few startup ventures during that time that I worked on, but none that were as intriguing as what Flexa became because long story short, I learned about crypto in 2016, 2017 in a real deep way because it became part of my legal practice. And through that exposure to the technology, and when you're a litigation attorney, you have to learn pretty quickly when you get a matter in front of you. So I had to learn pretty quickly about crypto and more importantly, valuation of crypto assets and really how the technology was changing things already back then. And then you look forward and you start to think what could happen next. And that brings me to meeting my co-founders at Flexa, Tyler Spalding, Trevor Filter, Zachary Kilgore. Trevor and I, of course, still co-founders and running Flexa today. And quite frankly, at the time, I just thought it was going to be transformative. I thought it was worth kind of quitting everything else and focusing solely on this one project. So in 2018, I was co-founder, general counsel of Flexa. Today, as you mentioned, I'm the CEO, but we've been here now 8 years. So we've been building for a long time and we're really excited about where everything's going.
Yeah. So I guess the Flexa team is very, very lucky to have a co-founder coming from this part of law regulation because this is one of the biggest issues that others pinpoint when they say, "Oh, crypto is not okay," because yeah, there are so many illegal stuff around it. So yeah, now please tell me more about Flexa and the Flexa network. And yeah, I said there are over 60,000 locations. But yeah, probably there are more than this. And yeah, I would like to learn more about the Flexa
Well,
ecosystem.
Flexa started really as a merchant-centric business, and we remain that way today. I think the problem that we saw back in 2018 when we founded was simply that merchants were really being treated unfairly and they had no way out. Really, they were stuck in debit and credit rails that existed some 30 years before the internet was even invented, and nothing had changed and nothing was going to change, which meant merchants were faced with rampant fraud, high fees, interchange fees just across the board, folks having to pay astronomical sums as consumers, which of course then merchants had to pay to the actual companies themselves, banks and credit card companies. What we saw with debit and credit rails was a need for change to help merchants first and foremost. Then we started to look at some of the statistics, and we've talked about this at length, but in the United States alone, the social cost of payments is 2% of the GDP, which means upwards of $700 billion annually. Just the social cost of payments. That's a ridiculous number, just money being lit on fire needlessly. And that's all because we use these analog debit and credit rails, helping credit and debit companies just continue to purge the system of everything that's good. So for us, it looked like a great opportunity to actually solve a critical problem, help merchants, and therefore help consumers. And in so doing, even looking at the consumer population, we wanted to make sure all folks could participate. So it became also along the way helping unbanked, underbanked folks finally participate in commerce, no longer being blocked from participating because you simply don't have the right credit score. You couldn't get a bank account. We think everyone should be able to participate in commerce. And with Flexa, you certainly can. Anybody with a cell phone can certainly pay at our merchant partners and participate in commerce. And we know that's only going to grow as there's more and more adoption. So Flexa is a payment platform, merchant-centric, helping merchants eliminate fraud, eliminate needless costs, so they can finally help consumers and more consumers can participate.
Yeah, so you mentioned there about this idea that consumers can pay using their smartphones and also merchants by having some of these terminals. So what's the profile of the merchants? It's only small size merchants, I guess not, since you have such a large network. Please tell us, yeah, how can a merchant participate within this network?
Yeah, it's certainly not a small size merchant only. In fact, we set out in 2018 to go after enterprise grade merchants first because we wanted the challenge. We knew if we could build this for, Barnes and Noble, if we could build this for GameStop, we could build it for Regal Theaters, Chipotle restaurants across the nation. We knew if we could tackle that problem first, then small and mid-sized companies would actually be easier to help. So that's exactly what we did. And today, Flexa, and I think this is still true, of all the Fortune 500 companies that accept digital assets, they accept them through Flexa, nobody else. So you'll hear a lot of chatter in the digital asset space, especially since the Genius Act passed here in the US. So there's finally stablecoin legislation. There may be market structure legislation coming. I certainly hope so. There's some new wrinkles in that debate, but we look forward to that regulation as well. Point being, when Genius happens, what we see is more and more companies and folks trying to participate in this space, and we applaud that. We want anybody that can help a merchant to participate in this space, because quite frankly, it's just a broken system. We want it to get better, whether it's us or anyone else. But what we see are our competitors and other companies doing it almost in ways that are too fast or too quick or too simple or too easy, that just to make a splash in the news. I'm not sure they're really helping merchants. And what I mean by that is they limit it to the 1 or 2 or 3 assets only. Maybe it's just stable coins only. They limit it to 1 or 2 wallets only. Maybe just 1 wallet only that can spend on those networks. Or they limit the chains you can use. You have to use chain X or chain Z. You can't use any chain. So what we tried to do for merchants was give them optionality from day one. And what that means is truly any asset can be spent on the Flexa platform. Truly any wallet can integrate, and truly any chain is operational within the Flexa platform. So for us, that was mission critical. Now merchants have optionality. They also have optionality on what they can accept on their end. So there's a lot of our competitors out there that are building these platforms, but they force merchants to accept digital assets and custody those digital assets, literally in their own wallet. Many merchants don't want to do that yet, or they can't do that yet. They can't make that investment yet. So what Flexa did, again, is provide optionality. Folks can spend one asset and the merchant can accept any asset they want with the Flexa platform, whether it's just USD or any asset that's in the digital realm. So again, optionality. And then most importantly, and maybe we'll talk in this in a bit more detail later, is AMP, the AMP token, because Flexa is the only payment platform on earth that fully collateralizes every payment that flows through the platform to protect merchants. That allows us to give every merchant, small bodega shop in New York or massive Chipotle across the nation, a written guarantee that they will be paid. The only reason we can do that, the only reason Flexa is the only payment platform on earth that can do that, is because the AMP token collateralizes all payments that flow through the platform. So you take everything I just said, wrap it all up. Flexa is literally the only payment platform doing all of that. And the reason we're doing all that is to give merchants optionality and to make merchants stronger. If a company isn't doing all of that, they're shortchanging the merchant, in my opinion.
Okay, so you said many things. Now let's unwrap a bit some of this. Also
yes.
for our traditional audience, because you mentioned about the AMP and the collateralization, and I think that there is a bit of technicalities. But first, one of my curiosity, because like many crypto enthusiasts, you said you started some years back aiming high. So you went for the big merchants, the challenge. If it works there, definitely it works everywhere. And if we go back some time, I think people were more skeptical on crypto. What did you say to convince these big merchants?
Wonderful question. When we started talking to merchants, the big concern, in fact, the prevalent ignorance that abounded everywhere, not just with merchants, but across the globe in the entire financial sector, is that cryptocurrencies were for money laundering and terrorist financing. That was it. What other possible good could they be used for? That was the prevailing thought. So the first thing we did at Flexa, and sometimes this takes 2 months, and sometimes, well, certainly it's taken years, and some merchants we've been talking to for over 5 years, is an education process about the technology itself. So when you start to talk about distributed ledger technology generally with anyone in the financial sector, you begin with the technology before you even start talking about Bitcoin or start talking about
Yeah, yeah, yeah.
cryptocurrencies. Talk about the technology and why it's transformative and how we can finally move value anywhere on earth immediately at little to no cost in a transparent way that everyone can see and no one can reverse. And it becomes this light bulb moment once you go through the process of learning about it. I know you know this. I may be preaching to the choir here, but that's what it takes with merchants. The first thing we had to do is educate them about the technology first, and that can take some time. But I will tell you honestly, with every merchant we work with and every merchant we're talking to, that light bulb does go off. Merchants
Yeah,
completely understand this is a transformative technology that will eliminate traditional payment rails. Debit and credit rails have an expiration date. 100%, no doubt, that's unanimously known by every merchant across the globe. Some differ of when this is happening. Is it 2, 5 years, 7 years? Is it 25 years, 27 years? Everybody's got their opinion, but one thing that's consistent is we all know the technology is changing. So, to your question, the first thing we do is talk to merchants about the technology. We
mhm,
show them how much better it is. We show them that we can eliminate fraud in payments. In fact, Flexa already has. That's a very grandiose statement. To say you're eliminating fraud is crazy. Almost nobody believes that because it just sounds untrue. We're so used to fraud in payments. We're so used to things happening because your information is stolen, your card is
yeah,
stolen. But with, of course, this technology, you're not pushing your private information across rails. It's completely protected because this is, we're using cryptocurrencies. And so there's no more fraud in that regard. And in instances where bad actors try to be fraudulent, building a fraudulent wallet or anyway interfering, or even in cases where just transactions fail, it's no longer even relevant to the payment rail because again, we collateralize all of those payments with the AMP token. So going back to the heart of your question, what do we do to convince them? We show them, we don't have to convince them, we show them and educate them
mhm,
that the technology is better. We show them it's going to cost them much less. I mean, we charge a 1% transaction fee across the board. That's it. And most of our merchants are actually paying less than that. Our goal is to drive that as close to zero as we possibly can. And I think we can get near zero for the cost of payments for merchants, which means merchants look to the future and they see the light. They understand, oh, well, the days of being beholden to credit and debit rails are over. Those days are over.
okay.
It's just a matter now of adoption with the technology, people embracing it, and they will. Soon people will be spending with digital assets just like they send a text message. They won't even know how it works. They won't care. It's just happening, and it's going to save merchants money, and it's going to save consumers money, and it's going to make payments more efficient and open for all. And that's amazing.
Yeah, and since you mentioned, yeah, the M token, and
Yep.
you said, yeah, that people will, let's say, not necessarily ignore, but won't be dealing with the technicalities. However, for our watchers that are not that familiar with
Yeah.
these concepts, can you briefly explain? I mean, me as a merchant, do I need to be crypto native to be part of this, or how does it work?
So merchants need to be crypto native to be part of almost every other
Okay.
digital asset payment rail. Not with Flexa. You do not need that with Flexa. Quite literally, we can onboard merchants. They don't have to change anything. We do all the work. They don't have to modify anything. They don't have to
Okay.
invest
Okay.
in a new point of sale. Flexa does everything for them at no cost. So they can onboard and accept digital assets really with no costs. And then the only thing they're paying is that 1% transaction fee to Flexa, which of course is far less than what they're paying with debit and credit rails. So no, they don't need any knowledge unless they want to gain it first, which of course we're happy to do. And as mentioned, we work with merchants for years to make sure they understand how this works. So really for merchants, it's as simple as contacting Flexa and us onboarding them in any way they want, whether it's we have multiple different people can go to our website and see there's different products in place of how merchants can accept digital assets. 3, 4, 5 different ways they can do it at this point. We make it so easy for them to pick from a menu to accept digital assets that there's really no excuse at this point for not doing so. Quite frankly, I think merchants are starting to see that and starting to do that for that very
Yeah.
reason. Even if they aren't sure, or even if they don't know what the volume is or what the adoption is like, one thing they know is they got to have it because it's going to shift. Those scales are changing.
Yeah, and since you mentioned that one of the things Flexa offers By the way, you kind of got me when you said merchants need to be crypto native because I was, huh? But then
Yeah,
you said,
no,
oh, we're not at Flexa, but
yeah.
returning to,
And
yeah, some
I
other
think that's,
benefits.
well, the reason I said it that way is because it's very important. I'm getting a little troubled right now in the space when I see other companies pop up and say, we have digital asset payments. Yay, we did it. And no, you didn't. Not if you're making merchants be crypto native. Not if you're making merchants learn, build, or custody assets or suddenly design Web3 interfaces for themselves. Not if you're limiting those merchants to one token or two wallets or one change. Not if you're stripping optionality from them. What are you doing? That's not what the technology was for. This technology should be so merchants can quite literally have optionality in the assets their
Yeah,
consumers spend, the assets they accept, and they need protection during all of this. They need to get to finality immediately. People can't wait 40 minutes, 20 minutes for a Bitcoin transaction to fulfill. And a lot of these competitors of ours are making merchants do that, or they're doing it quickly and straddling them with unnecessary risk. And I'm really proud of what we've done at Flexa because we've addressed all of these issues over 8 years. We've built this right. And I really do believe, and I'm not just being subjective, I really do believe Flex is the only company that has done this right for merchants today. Hopefully others catch on and they do what we're doing to protect merchants. But I think the rush to enter the digital asset space, quite frankly, is dangerous to merchants in some ways, unless they do listen to what I'm saying, talk to Flexa first, and then you have the optionality and protection you need.
yeah, and since you mentioned optionality, now is more my curiosity because after doing my homework, I found there that you cover around 99 types of cryptocurrencies, and I was curious, what are the, let's say, top five most used cryptocurrencies across the Flexa network,
Well, to clarify, the
or
99
also
plus,
maybe some demographics around the usage of
yeah,
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 this
yeah.
type of payments.
I could certainly share some of that. Some of it we do keep private. Certainly merchant information we keep private, but I'll tell you, 99 plus digital assets is more marketing than reality. The
Okay.
reality is we could accept far more. We can accept any digital asset.
Exactly. Yeah, yeah.
So, I mean, I think there are tens of thousands of digital assets
Exactly,
right now.
because you mentioned blockchain interoperability with other. Yeah, yeah, yeah.
Yeah. So, I mean, and there's some that are coming. You mentioned earlier loyalty. I do think merchants, and I've mentioned this before publicly, is I do think merchants are going to embark on a path of having loyalty points tokenized such that folks can spend loyalty points with their merchants. And merchants will also have their own tokens that they'll create for their shoppers and for their loyal customers. And I think that's going to be the overwhelming favorite by consumers and merchants alike. So for Flexa, we needed to be built, and we are built already today to power payments with loyalty points, to power payments with merchant assets, because we're built to power it with any digital asset. I don't care which one it is. So 99 plus, yes, but it's really 99 plus infinity. Any digital asset can flow through the
Yeah,
Flexa
yeah.
network. Today, to answer your question, remarkably, and this still shocks me, the number one asset is still Bitcoin. Folks still spend Bitcoin more than anything else. I have a couple of personal theories. I don't
Yeah,
know if it's true.
yeah,
I
it's
think,
shocking because
yeah,
usually it
yeah.
was considered more for investment, not necessarily spending.
So yeah, but remember the original purpose of Bitcoin. It was
Yeah,
for
yeah, it's true,
payment.
it's
Yeah.
true.
So, and I think that folks that are truly, they've been in the game for, 14, 15 years now. I think the idea of spending Bitcoin is so fulfilling. Finally, you can spend Bitcoin and you can spend it at Flexa and walk
Yeah,
out with your cup of coffee immediately. You don't, like I said, you don't have to wait for the transaction. You don't have to wait 20 minutes. We can do that because we collateralize the payment, of course.
yeah,
But
yeah.
since folks can spend their Bitcoin, they are. Now, you're correct. I do believe it's going to be more of a store of value asset. It's more, it's the digital gold. It's people are going to want to hold it as an investment. I believe Bitcoin more so than spending it. That's what stable coins. I think already we're seeing that growing really quickly on our platform. It's going to catch Bitcoin maybe even this year. Payment stable coins, USDC, others. So those tokens are the prominent spended assets on the Flexa platform. And then I think in third place, meme coin culture is so powerful.
Still?
When folks get into their meme coins, when folks get into their, I don't know, kind of a club of sorts, they really power payments with their own assets. So I think we'll see more of that. I think we'll see more of folks embarking on a journey with almost like a fan club with assets that they like to spend. I think the critical feature there goes back to what I was saying. It's optionality. This all comes down
Yeah.
to option. Consumers should be able to spend whatever token they want. Merchants should be able to accept whatever token they want. And we're making that happen.
Yeah, so out of these two questions pop up. So first, because you mentioned the meme coins, maybe tell us a bit the Digital Spenders Club, but this idea of community of
Yeah.
what keeps them hyped. And also this fact that from how you present things, I have this feeling that despite everyone sees that stablecoin is taking a main stage, I feel you that you have a different vision. Not necessarily that you are okay with stable coins are now front stage, but I hint you that you see them overpassed by loyalty tokens and other things. So digital
Yeah.
spenders club and the loyalty tokens.
Well, Digital Spenders Club, I think, is just awesome. I'm a big fan. It's not something Flex is directly involved with, but we are fans of it. So
Maybe
that's maybe,
to give a bit of context what it is to our audience.
yeah, well, the Digital Spenders Club is a movement really to empower folks to both learn more about digital assets, how you can use digital assets in commerce, and really just growing a community of supporters to get the word out, really to spread kind of the knowledge and, quite frankly, uh, excitement about this asset and the
Yeah, yeah,
assets and how they can transform commerce. And it's really a collective group of really, curious minds who are trying to spread knowledge and spread excitement. And I'm a big fan of it. And I think they're doing a wonderful job. I know they have some things in store in 2026 and beyond that's truly exciting. So
so
again,
maybe
I want to be clear, Flex is not associated with the Digital
yeah, yeah,
Spenders Club. I'm just a fan of the Digital Spenders
yeah,
Club.
yeah. Or maybe you can connect us with them to have also an interview with them. Wink,
No,
wink.
absolutely. Oh, absolutely. They would love to talk to you. Absolutely. Yeah, wonderful.
Yeah, and
And
the
then you had
other part,
yeah, go ahead. What was your
and
second
the
question?
other part, what do you see more promising or visionary besides the stable coins in the Web3 payment?
Yeah, and I don't want to knock stable coins. I mean,
Of
we've
course,
fought
yeah.
Flexa itself. Me personally, worked in DC for 2, 3 years, meeting with every congressional office I could possibly meet with, and that was a lot.
Mm-hmm. Yeah,
Helping with stablecoin legislation, and some of what we did actually shows up in the Genius Act, and that was a lot of diligent work by a lot of folks here at Flexa and some of our outside counsel. And the reason we did that was because we knew how powerful stablecoin legislation could be purely for payments, but across the board. And we knew we needed regulation here in the US because without it, you can almost ignore what the regulation says. You need regulation to give this asset and this sector legitimacy. You need to authenticate what we're all doing in some way by having actual laws and guardrails that surround it so you can tell builders how to build, number one, in a safe and compliant way. So now more folks can jump into the industry and build and express their ideas and actually create things that can be transformative. That's huge. And then, of course, you need it so that you can make sure everybody is acting in a responsible way and you can protect consumers in a more powerful way. And that is super important as well. So I am a big fan of the legislation and a big fan of stable coins. And I think they're truly powerful for payments for the reasons we've discussed. It's
yeah,
not a situation where, you're going to buy a $1 billion pizza because you should have held on to an asset. It's really one for one. And these are obviously most of them USD backed stable coins that are being spent today. And I think that's great for merchants and for payments. What I'm saying, though, is I don't think that's the end of the story. I
yeah,
think that's a wonderful beginning to the story. But what merchants are going to see is while they're accepting stablecoins for payments and anything else, especially through our platform, they're going to see there's a use case for their own loyalty points. There's a direct use case for rewarding loyal customers. And that's going to be through tokenized loyalty points that folks can collect and spend. And maybe not even limited to spending at one merchant. Maybe those tokens could be spent across the board at other merchants. And then you're going to see companies, and I won't name the ones I know are already working on this, but I can tell you merchants are going to have their own tokens. They're going to, probably all of them at some point. And those tokens will be used not only for payments, but also for other projects as well. And those tokens, I too think, will be able to be spent across the board in different ways. I mean, I do think there's a world in which you're going to end up paying your US taxes with some kind of Nike coin. I think that day will happen at some point. And I don't know
yeah,
Nike's building the token or not, by the way. I'm just saying I see a world where all that is happening, and I don't think it's too far away.
yeah. This reminds me a bit of the stories of the metaverse that we heard, I think, 3, 4 years ago. that yeah, there will be like virtual spaces, and for those virtual spaces you would need, yeah, virtual coins to offer. And
Yes.
since we talk about visions, yeah, what are the plans for Flexa in 2026?
Really, for me in 2026, there's a few things I'm trying to personally accomplish. One of them is on the compliance front. Flex is a very compliance forward company. I mean, one of the first things we did was build a BSA AML program to protect our merchants, quite frankly. We registered with FinCEN here in the US to be a money services business. And I've been looking internationally over the last 2 years of where to expand. We're licensed in El Salvador, so we operate there. We're now fully licensed and can be operational in Canada. So I'm looking forward to launching there with merchants. I'm looking at the SEPA countries in Europe. I'm looking in Latin and South America to launch. And of course, all that for Flexa. There's a lot of companies out there that just launch and then they go try to figure out the regulations later. For Flexa, we do it the other way. We go and we make sure we're authorized to practice and we have all licenses needed. And I know that can be frustrating to some Flexa fans out there, but we do that to protect merchants. We do that because we care about merchants. We do that because we want to be here for a century, not a year. And we're always going to do that. As long as I'm here, we're always going to do it that way. And that's simply to protect merchants. So really what I see for Flexa in 2026 is expansion jurisdictionally and many more merchants, both large enterprise grade merchants, mid-sized merchants, smaller merchants, more merchants across the board that we've been working with that I truly believe are close to launch. And that's super exciting for me.
Great. So, Daniel, thank you so much for today's interview. And yeah, I look forward to maybe, I don't know, have like a symmetry to have one in December to see how far Flexa
Yeah,
reach,
yeah.
how many merchants back then, and to see, yeah, the top of most spent cryptocurrencies on Flexa network.
I'm here for it. Looking forward to it. Thank you.
Great.